Hello, everyone. Very excited to introduce our next speaker. We have David here, VP of Sales at Kickfurther. In this session, David's going to be sharing tips to prep your inventory for Black Friday, Cyber Monday. So David, I will pass it over to you. I'll make sure your screen share is all good to go, and then I'll give the stage to you.
Thanks, Krista. Hi, everyone. I don't see the screen share option yet.
Let me see. Lindsay, do you know where that would be?
Got it. Found it.
Oh, there we go. Looks great.
Cool. Hey, everyone. Thanks for joining us. Tis the season. Today, we're going to be talking about preparing your inventory for Black Friday, Cyber Monday, specifically from the standpoint of funding your business and making sure that you have the resources you need to maintain the growth path that you're on. So this can be the most wonderful time of the year for many businesses. It's when they make, the biggest lump of their sales, but also could be extremely stressful because you're in a tight cash situation, or you're potentially running out of inventory if you under ordered or you over ordered, and then you don't have the resources to grow the rest of your business. So that's what we're going to get into today. With a couple best practices, and then we'll talk about different ways to fund your growth, and we'll finish up with a deep dive into inventory funding. So one thing you want to make sure is to evaluate your current inventory. Most of you have already probably placed and received a good portion of the inventory you plan to sell during Black Friday, Cyber Monday, and maybe you've seen some early sales spikes, and you find yourself in a position where you need to order more fast. It's important to forecast demand and then reforecast demand and ordering needs as often as possible. Another thing is you're driving a lot of your sales through digital marketing, through influencers, through whatever means that you're getting traffic to your site to buy, or to through your buyers, and you need cash for that. So you in many cases are heavily reliant on spending on ads in order to convert all your customers during the busy holiday season. And the last thing to keep in mind is you want to order as infrequently as possible so that you can maximize your volume discounts with your manufacturers, but also not put yourself in a situation where you're sitting on too much inventory or you haven't ordered enough. So now we move into how funding sort of plays into all of that. One way to free up cash is to fund up to 100% of your inventory costs. So there's a number of funding solutions that we'll go through on the next slide that will give us an idea of how to anticipate those kind of costs hitting your bank account. And you've got to be prepared for it so that you have the cash to spend on the rest of your business. You're going to want to capitalize on market demand and avoid stockouts. So what if you're in talks with a number of buyers and all of a sudden one or many of them that you didn't quite budget for came through? That's a situation I find many of our customers in frequently, and they're kind of scrambling to fund the next round. So always good to be prepared for that, know what your options are, and know which ones are the best to use at which times. Lower cost of goods, we already covered that, but the more you buy, and also, if you're shipping from internationally, you want to try to fill a container, basically minimize your freight costs and your warehousing. It's sort of like a give and take, because the more you order, the more you're going to be warehousing. But generally, keep an eye on all of those things. And then another big thing is oftentimes at this time of year, you're releasing new product lines and potentially adding the new sales channels. So these are things that can put a cash crunch into your business, where usually you have the resources from sales in order to pay for the next round. But if you've invested a lot of your cash into new production of stuff that hasn't sold yet, then you might find yourself in a situation where you're actually going to need a cash infusion from one of the providers out there in order to be able to produce and maintain the demand. Expanding internationally is something that can draw the same kind of cash crunch. where you're adding a new country on Amazon or Shopify, or even one of the retailers that has an international presence. And the last thing to do is really be careful about which money you're going for, because some money is more expensive or burdensome than others. Some will affect your financials in a way where you can't work with other capital providers, and that's a tough position to be in, because you're locked with one solution that may not be sufficient for you. So let's go quickly through a list of funding options. Bootstrap. Everybody starts this way, more or less. You're trying to fund your business as much as possible without borrowing, because your own money is cheaper than borrowed money. But you reach a point where most of us require outside capital. Credit cards are a good sort of next step for that, because they have very reasonable rates and they're accessible to everybody, whether it's personal or business credit cards. One thing to be very careful about with credit cards is that if you exceed a certain amount of your limit, you will actually negatively impact your credit. And that'll put you in a position where, as you grow, you're going to be less credit worthy with the institutions that you really want to work with. So just be careful with credit cards. They seem attractive, but they may put you in a bad position down the road. Banks. Everybody loves borrowing from banks. That said, it's very hard to get through the application process and qualify, because banks are risk averse. And even if you do qualify, it's often not going to be enough. And like I said earlier, banks often will restrict your access to any other lenders because they're so risk averse. And if somebody else is introducing an obligation to you, then that puts them in a tough position when they're trying to recover their funds. Equity, many of you may have investors, whether it's VCs or angels in the early stages. Those people are often willing to put up some more cash, but it is very expensive when your business is growing in value quickly. Purchase order financing has been available for many decades, and purchase order financing is sort of a precursor to AR factoring, in that when you receive an order from your buyers, you can bring that order to a PO financer, and they'll advance a certain amount against that order. The challenge with that, as with factoring, is you need the order in order to initiate the payment to your supplier. And if that's the case, sometimes you're running on a really tight timeline and you don't want to be late to pay to deliver product to your buyer. Factoring is similar to PO financing, but it's lower risk because it occurs after the inventory is already landed with the buyer. But it also lengthens your time period, because imagine you've actually already had to produce that inventory, deliver it to your buyer, then you can factor the invoice with an AR factor. And it may be cheaper than purchase order financing because, obviously that inventory has already arrived. So you're eliminating the entire risk of manufacturing and logistics and freight and all that. So merchant cash advance, MCA, many of you have heard of these solutions. Some of the friendlier versions of it today are called revenue-based financing. These are solutions where you receive funding and then they hook into your bank account and they do a daily draw of all the deposits that are coming in, or they do a daily draw of your e-com revenue as you sell through a particular platform. Those can appear attractive, but in many cases may be quite expensive because of the compounding effect. Think about it. If you access a certain rate, and that rate is as if you make the entire payment on the last day, but you start paying on day 1, day 2, day 3, the rate is astronomically higher on those early days when you're paying back. And you have to pay back because as the inventory that as the inventory that you're selling goes through into the bank account, they're taking a percentage of that. The last solution is inventory funding. Fortunately, I work for a company called Kickfurther as VP of Sales, and we do inventory funding. And we're here to help with all your inventory needs. Now, whether you bootstrapped or used credit cards, or you have money from a bank, or you're using some equity from your VC investors, we can still help you, along with all of the other solutions. So with Kickfurther, know your rates. That's one thing that we always say, like, we don't claim to always be the cheapest. In many cases we are, but we are providing a flexible solution that allows you to pay for your inventory when you need to pay your supplier, not when you receive an order from a buyer, not when you've already delivered it to that buyer, but when you need to pay your factory. So know what your options are and know what the costs are. We're always willing to do price comparisons with other solutions, and that are on a spreadsheet and easily digestible. So that's something to consider. We fund up to 100% of inventory costs. When you're factoring or PO funding, you get an advance of a certain percentage of the order amount, but not necessarily the entire amount that you need to pay for your inventory. And also, you're able to cover 100% of your inventory costs that may be going towards a multi-channel approach. So let's say you're shipping a big order to ShipBob, and some of that is going to your e-com sales, some of it is going to Target, some of it's going to Costco, right? We can fund all of that inventory upfront, pay your suppliers, you get those quantity discounts that we discussed, and be able to pay for all the stuff that you need for the entire holiday season. That way, you also have taken the biggest cost that you'll likely incur during this holiday season and offset it with funding. So everything that you were expecting to pay out of your bank account towards inventory is now free to spend on, marketing or fulfillment or new packaging or whatever else you need to pay for your business. Custom payment terms, you don't make payments until your products sell. So the way that every deal is structured is that you actually set up the timeline. So you'll say, hey, I need to pay my suppliers on October 1st. October 1st, the money goes to your suppliers. Oops, go to the next slide. Money goes to your suppliers. We establish the sales periods based on when you expect that inventory to land and then sell through. So the invoice will happen after that inventory is actually sold, and it can happen once if all your inventory is going to one retail buyer, or it can happen multiple times as your inventory sells through a multi-channel sales approach or through e-com. And pay as you sell. So the expectation is we structure the deal so that the cash has come back to you and you can use that cash to pay us and repeat as necessary. Many of our customers will have multiple consignments. We operate a consignment agreement as our underlying asset, which is really the basis of why it's possible for Kickfurther to work alongside any of the other financing solutions. So what occurs is we are purchasing the inventory and consigning it to you to sell on our behalf. So we're actually the owners of that inventory, and therefore it's not a debt on your balance sheet. Once you've sold it, that transaction occurs and you're buying it back from us. So something we can review in a conversation later, but the accounting aspect of it makes it, very flexible solution with any of the other funding options that you're working on. So how do you work with us? Scan the QR code or email partnerships@kickfurther.com. We'll build you a customized deal and give you pricing and how much you're eligible for, and you'll be able to rinse and repeat as needed. As now maybe you're finding that you've underprojected how much inventory you need, and all of a sudden you got to place another order for January, or the new product is about to hit the shelves and you've got to find the money to market it. So you got to free up that cash from the inventory.
Awesome. Thanks so much, David. This was a great presentation. If there are any questions for David, you can head over to the Kickfurther booth, ask some questions there. And as a reminder to keep the questions in the chat up, we have our next winner taking home an Our Place pan and steamer. So thanks so much, David, and everyone. Stay tuned for our next session.
Thanks, Krista.